we're around 2 minutes past 3, and everyone knows I like to start my webinars on time. So I want to just welcome everybody and thank you all for joining us this afternoon. This was a very popular webinar, so I'm sure we're all going to be having lots of conversation and discussion today. Just a quick couple of sort of housekeeping things. Many of you will obviously know me, but I'm Sarah Corley. I'm DFI's community manager, and it's my pleasure to organize the webinar series. I'm going to be recording today's session and sharing tomorrow with all of you and anyone who maybe missed out on today, so that we can all catch up and make sure if we really enjoyed the session that we can share with our colleagues. We also want you to participate as much as possible. So at the bottom of your screen, when you move down, you'll see a little function called Q&A. If you've got any questions for either Jeffrey or Ignacio, you are very welcome to put your questions in that Q&A function. And towards the end of today's session, we will address as many as we can get through in our time. I want to welcome Ignacio for joining us today. Ignacio is going to help me with the question moderating, and I'm sure is also going to have many questions for Jeffrey as well. So we'll come to Ignacio a little bit later on in the webinar, but welcome Ignacio. And I want to introduce to you our special guest for today. So Jeffrey is the CEO and founder of Bauer & Partners Consultancy Service, and he is a digital financial services and payments expert. He's really passionate about accelerating the use of DFS. And I think we can tell that by many of the comments that he's made and things that he shared in the league and in the classroom. So we're really excited to hear more from him, and he's had such amazing experience. So he's authored national strategies and influenced regulations. He's been payments lead at the UN World Food Programme, consulted for many organizations that we all know the names of, including World Bank, IFC, AFI, and Better Than Cash Alliance. So I think we're in safe hands for the next hour or so, and I really look forward to hearing from you. So Jeffrey, over to you.
Sounds good. Perfect. Thanks very much for the introduction. I really appreciate it. I'm going to bring this conversation to a start with a small presentation that I'm going to do for about half of the time, and then I'm going to leave about the remaining half of the time to be able to answer any questions and really push the discussion forward. So let me just switch over to the presentation and I'll share my screen. If you cannot see my screen, let me know, but it seems like it is working. And we have now a full screen to begin the presentation. So I'm going to go ahead and read. I apologize, I prepared my notes. It's one of the advantages of not performing live, but being able to do it. But I just want to welcome everyone to this event. The fact that so many people turned out for this and that the interest was so high is really indicative of a strong change that's happening in the humanitarian sector, and really the interest for a lot of people to be able to understand how humanitarian payments take place. This is exciting because I think that the field of humanitarian payments is relatively new. And so it's exciting to hear that there's so many people that are coming to gain a better understanding of how these systems function, and really what advice people can give to make them function at a higher capacity. And this is true that this is new not only for new students who are involved in the courses, but also for people who are working in these large organizations that are distributing millions, if not billions of dollars in assistance. This is still pretty new. And so there's a lot of learning, there's a lot of ability to improve upon what's being done. And that's what I hope to share with this presentation. And so I just want to talk a little bit about who I am, not really about my company, but who I am. My name is Jeffrey, and as Sarah said earlier, I'm the founder of a consulting firm called Bauer & Partners. For the last 15 years, we've been working really with organizations all over the world to really promote the use of digital payments, reduce informality, and really help win the fight against cash. We work with governments, we work with companies and international organizations, and as you can see, we've worked with all of the big names within the development organizations to really promote the use of digital payments. That's included developing payment products, national strategies, payment schemes, influencing regulation around the world, and working for some of the biggest humanitarian organizations to drive their payment programs. And so I don't think this is new for anyone, but it's important to sort of frame things. Last year, $28.9 billion was spent on humanitarian aid. And the biggest humanitarian organization transferred last year $2.13 billion dollars in assistance to 24.5 million people in 64 countries. So we've seen a shift really where 10 years ago, the biggest humanitarian organizations were using digital payments to transfer a very small amount. And in a very short period of time, in 10 years, 35% of the biggest humanitarian organization's assistance in the world is now going through digital payments. And so that shift from 0 to 35% in 10 years is extremely significant. And it's promoted not only by the organization's desire to scale up cash delivery, but also a desire to improve efficiency and effectiveness and find ways to better serve beneficiaries. And so in countries where regulations permit, these organizations generally partner with large financial service providers. But in other cases where these organizations can't or won't or don't exist, a lot of organizations are pursuing the paths of being able to deliver these payments themselves. And we'll talk about that later. The challenge still remains in figuring out how to reach that last mile. And so as a payment expert, I come to the humanitarian payments with a bit of a different view than normal humanitarian workers do. Years of working with banks and fintechs, building payments products, banking solutions, working on core transactional platforms gives you insights on how payments should work, and gives you an insights on that working traditionally for a humanitarian organization or for a government simply does not. That's not to say that the organizations don't have the right kinds of background or knowledge. It's just to say that a lot of this work has already been done in the banking world. Payments is a problem that the banking world has been focusing on for the last hundreds of years. And so a lot of the challenges that humanitarian organizations face and governments face have already been solved within the banking world. And so a payments perspective to humanitarian assistance puts a financial services lens on development of aid distribution for beneficiaries. And so it understands a bunch of fundamental concepts like financial services, payments, financial education, product design, marketing, pricing, acceptance, and it applies a logic of customer focus, market segmentation, competition, scale, standard setting, and collaboration, all with the goal of reducing friction in transacting in order to scale the use of financial services. And so the viewpoint of a payments expert would look at not only other market actors as competition, but really as cash as being the key competition in the marketplace. And that's really the challenge that someone with payments expertise would bring. And you can see in this photo, this is a photo of myself, the former Minister of Social Development of Peru, Carolina Trivelli, and a collaborator of ours working in Peru for the first public test of the National Payment Service that together jointly we launched along with the Better Than Cash Alliance and other organizations who contributed to this kind of service. And so this is another interesting photo that I took in Haiti. This is a bank that I used to work for called Scotiabank. The interesting thing about payments and the incredible amount of work that's been done over the last 50 years is that payments has actually, as a global service, has worked really hard over the last 50 years to design the networks and platforms and services to get money from anywhere to anywhere, really in an instant. It's actually relatively easy now for anyone, anywhere, to go into a bank and send money to a bank in another country. SWIFT, the national payment standards, TransferWise, all of these organizations have really worked hard to solve the international problem of getting money from one place to the next. And so in this photo, it's really easy to get money from anywhere in the world to the bank in Haiti immediately following the earthquake. I was there just after the earthquake, and it's easy to get money to that bank, to get money into the accounts. And that's really a sign of the incredible work that the financial service organizations have done to be able to create an integrated global network that really functions. The hard part is what happens after it reaches this bank. To deliver funds to the people who actually need it and make those funds usable and useful for them is the hard part. To reach the acceptance points, to develop the cash distribution network, to fund accounts of the actual people is really a challenge. And of course, in most developing countries that we all work in, the more rural you get, the more challenging this becomes. And so because people don't have ID, because people don't understand the financial service or product that they're being delivered, because people operate informally and have done so for generations, and really don't have access to any formal liquidity networks, this is the key challenge that payments has been struggling with for years. And so the lack of common interoperable solutions, the lack of perceived profitability of low-end users, the cost of acquiring and servicing a customer, and the lack of financial education and infrastructure are really at the roots of the challenges that are part of financial inclusion. And so the figurative, or actually in a lot of cases, the literal mile between the bank branch or the ATM or the agent and the actual beneficiary themselves is considered the last mile challenge that we all struggle to resolve, and that humanitarian payments has to face in order to become a functional service for distributing assistance in the times of conflict or challenge, or to really disadvantaged people who are facing challenges at the time. We all know that financial inclusion, the incredible work that's happened over the last decade, has done a lot to resolve this last mile challenge. And so since 2011, the World Bank has done a number of studies to display that more than 1.2 billion people have gained access to a financial account. And so that's really decreasing the challenges of reaching these people and reducing the challenge of that last mile. But the people that we focus on, the people that humanitarian assistance focuses on, are really not the target of financial inclusion. I've always said that financial inclusion is further extending the base of the pyramid downwards, so that the people at the top of the base of the pyramid now have access to financial services. But the markets that humanitarian aid is focusing on, the kinds of people that humanitarian aid is focusing on, are really the bottom of the bottom and are still very far away from feeling the benefits of financial inclusion. And so the challenges also are implicit within this in understanding is, are humanitarian organizations intending to deliver assistance and solve financial inclusion, or is financial inclusion an ancillary element that's being solved as part of the work that humanitarian organizations face? Or should humanitarian organizations not focus on financial inclusion at all and instead become professional at really delivering assistance and finding the most efficient way of being able to deliver funds to people? And so these are some of the challenges that a lot of the organizations that you guys are hoping to work for are still struggling with at this point. They don't know what role they're supposed to be playing and how far they're supposed to go. And so the interesting thing is that in order to be able to deliver assistance, it's often done in a manner that is in the interest of the organization, in the interest of the donor, and therefore the delivery of actual assistance is not in the interest of the beneficiary themselves. And so that results in a clumsy delivering of assistance. And in many times it's delivered in a format or in a manner that doesn't make sense for the beneficiary, but serves either the donor or the organization's interest. And we'll get into more detail later. The goal of this presentation is to share my experience of having worked for many organizations around the world, and to give you some important considerations to think about beyond the theory that's being taught in the courses by DFI. And so let's talk about some key challenges when we're dealing with digital assistance or digital aid. We all know that limited KYC is an issue, unstable electricity, having unreliable mobile networks, low financial literacy, poor liquidity management, low technical capacity, limited financial offerings, and mobility of beneficiaries are all challenges on the actual beneficiary side. These are the kinds of issues that humanitarian organizations face and have to deal with in order to be able to design solutions that make sense. But from an actual organizational perspective, there's still limited understanding and capacity on how to do contracting properly, how to perform identification of beneficiaries and registration that makes sense, not just for the organization, but for the beneficiary, how to properly train the beneficiary on using financial services products and who is responsible for that training, how to go beyond simply delivering the funds to beneficiaries and being able to assist them with actually understanding how these financial tools can impact their lives. Organizations may or may not have a role in developing a kind of acceptable identity to be able to move people out of informality and into some kind of limited sense of formality. Organizations face many challenges with managing liquidity from an organizational perspective to be able to understand whether it's the responsibility of an organization to be able to seed an agent network, to be able to build and manage an agent network on their own, or whether they should be supporting an organization for doing so. They face similar challenges of low usage of their products. Some of the products that are designed from development organizations aren't used as intended. And so these are challenges. And then of course, just a poor experience of being able to deal with very complex products that put in security requirements that meet donors' obligations and meet organizational requirements, rather than focusing on the actual user experience of the beneficiary themselves. And so these are the challenges that need to be faced, both on the side of the beneficiary themselves, but actual on the organization, to be able to manage and understand how to advance properly and develop solutions that are in the beneficiary's interests. And so I believe to beat these challenges, organizations have to be super razor focused on building products that put their beneficiary first. What is the beneficiary's challenges? How does technology serve beneficiary interests? And how does the product or service that's being designed serve the beneficiary's problem first? How does the programs that are being implemented make life easier for the beneficiary? Is a solution simple, easy to use, and does it just work? I think that it's really easy to talk about this, saying, of course, people put beneficiaries first. And of course, people want to focus on making beneficiaries' lives easier. The reality when building these programs and platforms is that that's not simply the case. And so when we talk about how do current operations take place, the current functional service elements involved with delivering assistance are very extensive. You have levels of market research, program design, targeting criteria, payment mechanism decisions, entitlement rule sets. You have to find the people you want to work with. You have to identify them and provide the kind of identity necessary to be able to understand who they are. You have to register them. You need to screen them to make sure they meet with your requirements. You have to activate them. You have to fully enroll them as part of members of your program. You have to then determine and apply entitlements for the amount of funding they're going to receive. You also have to do market assessments. You also have to contract with FSPs. You also have to do account creations, instrument management, ensure that the funds are actually in the country you want to deal with. You have to develop a full payment list, verify that payment list, go through with payment processing, ensure that payments have been completed as proper, manage all of the errors, establish and set up a customer service center or a call center, operate and manage agent networks, cash in, cash out points, assist with liquidity management, and then establish merchant networks, retailer networks, digital and or virtual acceptance for your products if that's appropriate, and work with other FSPs or third parties to be able to accept your product. And then at the end, there's a whole process of financial reconciliation, confirmation of donor and program objectives, manage issues, focus on reporting from the FSP perspective, focus on reporting for the donor perspective, do a performance assessment, user analytics, monitoring and evaluation, post-evaluation audits, and then an internal review. So the idea of going through with these digital financial services is a really onerous task. And so current cash interventions basically require working with banks and mobile money operators, but also retailers, insurance companies, point of sale merchants, card manufacturers, and others. And so one of the big challenges for the future will be understanding how to leverage these partners along with new fintech players in the marketplace to be able to scale the use of these services. Working with one FSP, as much of a challenge as it is, isn't going to be sufficient in the future. Development organizations and humanitarian organizations need to understand that there are many different aspects within the actual service delivery chain that need to be worked on, and that humanitarian organizations have to become better at understanding the value of partners and subcontracting elements of humanitarian assistance to focus and to become experts on what it is they do. And that is identification, becoming the middleman between financial service providers and actors in the marketplace and people who are at risk. And that's really the role where I believe humanitarian organizations remain hugely relevant actors in this entire space. And so each country presents a very different set of challenges and a different series of actors, but the complications of being able to deliver to beneficiaries is common really in all of the operations around the world, whether there's an FSP partner or not, whether you're in a middle income country or an extremely low income country, the challenges are still very similar in being able to manage all of this in-house or outsource as much of this as possible. And so coming from a payments perspective, the fundamentals of resolving the challenges of delivering cash-based assistance are not only external, it's not only market-based, not only dependent upon who is available in the market, what kind of partners you have, but also internal within an organization. The systems that exist today are built upon a logic of delivering humanitarian assistance that's come from the way humanitarian assistance has been delivered for the last 60 years and is not necessarily relevant to the way that financial services does and should operate. Markets have partners who may not, cannot, or will not reach the recipients that we're trying to reach. And so that's really challenging, of being able to see the products you want to use, but figure out ways to be able to incentivize those organizations to provide those services in the areas you want to. Regulators in some countries actively prohibit the distribution of humanitarian assistance via digital means. And we can talk about some of those examples in the questions. And ultimately, the fact that most humanitarian organizations, unfortunately, focus on donor requirements and their own interests over the functionality and usability of the service from the beneficiary's perspective, further complicates decision-making, because you're not trying to be razor focused on serving the beneficiary. You have other actors and other interests that are taking value into it. So the next sort of few slides will go over what I consider important considerations for delivering financial assistance from a payment expert's perspective. And so the first, really, as I think I've highlighted a bunch of times, is there needs to be a razor focus on the beneficiaries. And so when we talk about who benefits from digital payments, most say, well, of course, the beneficiary benefits from getting access to their digital assistance on a card. But when you actually think about it 2 or 3 steps further, you realize that when you talk to beneficiaries, what they want is cash. That's all they want. They want cash so they can do whatever they want with it. And so aid agencies who tried to distribute cash faced a number of challenges in doing so. And so because of the increasing pressure on these organizations to be efficient and effective and reduce leakages that happen, a lot of times these humanitarian organizations have moved to digital assistance because of pressure they felt, rather than actually understanding the needs and interests of the beneficiaries. And when you think about it, what's better from a beneficiary? Opening an envelope and receiving cash, or going through a registration process, scanning their fingers, going back to be able to pick up a card, taking that card, using it at the few distribution points that have been registered for an organization, and then being able to have to go to this organization to deal with issues that come along with when they're transacting, that's just an extra complication for them. And so because of the pressures that a lot of these organizations face, there are times when digital payments are being implemented more in the interest of the organization and in the from the donor perspective than actually from the beneficiary themselves. And balancing that challenge is really, really difficult. Organizations have to understand their beneficiaries really, really well to determine what's in the best interest of their beneficiary based on the very specific solution. I am probably, you are probably going to laugh when I say this, but the reality is that in most cases, probably that's not true. In some cases, there are definite clear examples of where digital payments is a less optimal solution than cash. And when you look at it from a cost perspective, as many of these organizations do not do, that even becomes more clear. I think one of the clear messages for organizations is to make a list of all of the different payment preferences and all of the payment tools that can happen. Make a list and identify what are your preferences. What would you rather do? What makes it better for you to deliver? Which ones are more preferable than other ones? And then make a list from the beneficiary's perspective. What is more preferable for a beneficiary to receive and why? And then try to balance that when making a final decision. It's not only your own organization's preferences that matter, but really it's understanding the challenges that the beneficiaries face when it comes to that. Two, and this is an interesting challenge that I think that a lot of organizations have to be able to consider, is the fact that traditional humanitarian assistance is viewed in the manner of family assistance. And assistance is calculated based upon the way in which families are to receive assistance. And a lot of work is done during registration processes to build families and to be able to build interconnections between organizations. This, when you're delivering assistance in kind as food, may work. But when you're talking about individualized accounts and when you're dealing with financial service providers, this is a real challenge because, as we all know, KYC is individualistic. Formal financial services products, as they exist, are individualistic. And so pursuing the concept of family-derived assistance while trying to operate in a digital payments and digital financial services world is a big clash. One, because families change all the time, and two, because being able to maintain identities and from a fraud management perspective, that's traditionally done on an individualistic basis. And so either organizations need to adapt to understand the FSPs they're working with, or organizations they work with have to be able to design flexible solutions that understand the complexity of dealing with families in the future. And so you see this in a lot of organizations where, for cost reasons, they give a family a card where you have multiple identities stored upon one card. That works, and that's a workaround that's been designed because of the challenges that come along with pursuing a family-based approach. And that's something that a lot of organizations are now struggling with when their partners say, we work on individual identities. It's great that you want to deliver to families, but we need that individual KYC to be able to deliver to the people you want to deliver to. I think one of the big interesting new developments is that a lot of these humanitarian organizations who are increasingly moving into payments need to understand that they need to have a very close relationship with central banks, with the organizations that are responsible for managing the cash-based system in countries. One, from a regulatory perspective, to make sure that what they're doing complies with the law, and two, to make sure that the goals that they are pursuing and the manner they're pursuing it is something that works well with the objectives of the central bank. On one hand, the central bank may be willing to be flexible. I've seen this in a lot of countries that we worked in, that non-traditional identity, identities that are given out by the UN, UNHCR, World Food Program, or identities that are given out by other NGOs that are on the ground are seen as, are able to be considered as valid forms of KYC for limited circumstances. And so because of that flexibility, that requires an open conversation with central banks. The second point about financial inclusion is really, is this something that humanitarian organizations need to be focusing on? And if not, how does the central bank and other organizations responsible for ensuring the use of formal financial services products can assist with that? How do you develop a good fund systems? How do you ensure that whatever funds that are entering into the program are backed up by the central bank in case there's any issue of fraud, mismanagement, any elements? How do you protect the beneficiaries? And is the central bank willing to extend that onto the products that they have? And so this is more relevant for organizations that operate their own payment services products, which is now increasingly growing within the industry, not just WFP, but many other organizations are looking at their kinds of products and solutions that they're delivering. And they need to fully understand that if they're delivering funds that can be converted into cash in a system, that may qualify them as payment service providers. And payment service providers as regulated entities require certain kinds of record keeping, certain kinds of financial oversight through a central bank in the country. So this photo is a photo of the Central Bank of Pakistan. I was doing work there when I was developing the national payment scheme there that brought together the 9 branchless banking programs, bringing together 55 million users of financial services onto one shared common platform. And they really understand the value. They wanted to work with whoever was a big payor or payee in the marketplace to be able to increase the use of these services. And so you are a resource that they want to rely upon, and the organizations have to become better at understanding how to work with central banks to be able to design and develop solutions that make sense. And so this talks a little bit about how you gain scale in these programs. An inordinate amount of work is done by individual organizations to register individual people into platforms and to be able to deliver assistance to them. However, often multiple organizations are delivering assistance to the same people. That means that these individuals have to go through multiple registration processes, multiple identification programs, and in some countries are actually given different financial services products that operate on different logics and different rules for different scenarios. So you would have a beneficiary, somebody who's never, ever, ever used anything other than cash in their life, that now has 4 or 5 payment cards, each one with very specific requirements, some having cash, some having commodities, some having cash and commodities that can be used at certain stores where one card is usable at one store, the other card is usable at the same store as the first one, but also other points. And it really adds complexity for the end beneficiary to be able to use. And so finding out ways to bring people together and finding out ways how to bring programs together not only simplifies efforts for the organization, and it also simplifies the use for the beneficiary themselves. In this photo, you can see the association, the Banks Association of Peru, really bringing together all of the actors in the marketplace to design and develop one common shared platform and service. I was part of helping to develop this program, as I mentioned before, and now 36 financial service providers and 4 telcos operate on one interoperable platform, which sounds very complicated, but when you look at it from the beneficiary perspective or from the user perspective, there's one interface that's common between all of these actors, no matter which telco you're on, no matter which FSP you're with. And that really simplifies the use case for all organizations. What does it require? It requires a concept of interoperability, understanding what data sharing is like, developing common standards on ID, developing common payment rails, building common acceptance sites, common liquidity management networks, because again, the cash you're distributing for your beneficiaries may be valuable for other humanitarian organizations that are struggling with the same thing. By joining forces together, you substantially lower the cost of actually being able to deliver to the consumer, which is something that unfortunately many humanitarian organizations don't even think about, the actual cost of being able to acquire, service, manage, and deliver funds to the beneficiary. And so when you think about the challenges of liquidity, when you think about the challenges of acceptance, when you think about the challenges of designing and developing data standards, these are common challenges that all humanitarian organizations face, and that there should be substantial efforts to collaborate to be able to manage these issues on an ongoing basis. And I know that there's a common cash statement where the large international organizations are supposed to be collaborating together to develop these programs, but as somebody who's worked within these organizations, I can tell you very clearly, it's a long time coming, I promise you. And again, this is the result. This is an example. Everyone who's working in markets that have multiple mobile money programs knows it very clearly. It's great that an agent can accept all of these different programs, but it just makes sense for all of these programs to harmonize from a user perspective and all of the funds to be able to coalesce together, because money from one organization and goods from another organization, they're really dealing with the same thing. You're really just trying to assist the same person. I think one of my last points is understanding digital aid as a business. I think I've alluded to this before. Organizations don't focus on the financial model behind digital assistance. They don't understand what are the costs involved with delivering that $25 to a person in a rural area. In some cases, there are programs that are hemorrhaging money, and I'm being completely serious about it, that it costs more than triple to deliver the funds to an individual. And that includes the cost of setting up a program, the cost of registering individuals, the cost of producing payment instruments, the cost of being able to design and develop the architecture necessary, the cost of being able to assist with the call center and all of the services. Most humanitarian organizations don't run payments as a business line. And because of that, you have extremely high waste, not on the side of fraud, not on the side of leakages that are existing within the system, but actually on the side of the organization that itself is taking away value that could be delivered to a beneficiary themselves. And so the question always has to be asked, does this make sense? Does it make sense to set up payment networks using biometric identification for individuals in a market where you're only dealing with 100 people and they're only getting 2 payments? What is the actual cost behind it, and how does that influence decision making? I don't think that that kind of thinking has yet entered into many of the humanitarian organizations' perspective in a way that if you're working for a payment company, they're 100% focused on profitability of the use and efficiency of the use of their funds in designing these systems. And I think finally, the point that I want to mention is that the goal of humanitarian assistance is to be able to deliver assistance to people as best as possible, as efficiently as possible. And the goal of humanitarian organizations is to understand the value of working with the market, the value of being able to understand what it means to work with a regulated entity to be able to deliver their financial assistance. And so in a lot of cases, you would see actually humanitarian organizations competing directly with financial service providers in the delivery of formal financials product. And I think that that's something that really needs to be questioned of what point is it appropriate to use a financial service product, and when is it appropriate to either support directly or rely directly upon the services of an existing organization. It may be cheaper and easier to just pay for an ATM to be installed for the bank that you're partnering with, or to pay for an agent network to be set up in the areas you care for, than to go through the entire process involved with setting up and running your own programs themselves. And I think this goes not only beyond cost itself, but it is substantially less risky to work with a regulated entity to be able to design and deliver a solution than it is to be able to do it yourself. Of course, there are many scenarios where, because of KYC issues, because of many government requirements, that it may be necessary to operate solutions themselves. But the reality is in most cases, there are a number of providers that humanitarian organizations could and should be working with to substantially reduce both risk and cost in the implementation of their programs. And so finally, as a conclusion, developing these payment services, we've all seen as a result of the COVID-19 crisis that really the ability for a government to provide humanitarian assistance, social security, is no longer a nice to have. It is something that is actually an element of national security. It's an element of national stability, and it is a way for countries and to be able to have resilience in the face of crises, not only in pandemics, but also during hurricanes, natural disasters, earthquakes, floods, whatever it may be. Identity, payment services, and the ability to set up cash liquidity networks in these times of crisis is now being seen as fundamental. I don't think anyone is questioning that anymore. And so the goal really is to be able to understand how we as humanitarians, working for humanitarian organizations, can best strengthen the existing efforts of the markets to be able to perform these functions and deliver assistance. And I think when we think about it, it's great that we've put in all of these biometric rules and iris scanning, but when the market isn't doing that, when the market isn't operating on family logic and isn't paying people and families and isn't requiring biometric authentication or iris authentication, we're spending all this energy and effort to train the beneficiaries to use a product that isn't relevant to the market. And when we leave, and if we leave, the effort that it will take for formal financial services partners to be able to retrain the beneficiaries that we're serving is really a challenge, and that further leaves our beneficiaries behind. And so we really have to think about how to put our beneficiary in the center, not only for the service that we're delivering, but also when we leave and this beneficiary gets to a better place, that we can give them the skills and capabilities to become formal members of society and be able to take advantage of the tools that exist. And so these are some of my views, and I'm more than happy to share any of my thoughts and feelings and answer any of the questions that you might have. So thank you very much for giving me the time to present.
Wonderful. Thanks very much, Jeffrey. I think the one thing we can, I certainly would definitely say come across from that presentation is your passion and enthusiasm. And we really appreciate you honestly sharing insights from the work that you've been doing. I think it's easy to gloss over them and want to hide away from them a little bit, but your honesty there was really, really appreciated.
If people know me for one thing, it's for my honesty.
I'm going to ask Ignacio to kick us off with a question or any thoughts or anything that you'd like to share after that, Ignacio.
Well, that was very comprehensive. It covered a lot of ground, so there's lots to discuss, and I think you passed some very, very essential messages. So well done on that. Let me just ask one question, turn it to students because we don't have that much time left. But in this spirit of getting inspired and so on, it's easiest to get inspired not only by concepts or ideas, but also by realities. So let me put you a little bit on the spot, and feel free to avoid the question if you want. But what would you say are for you, kind of the shining examples of how to use digital platforms or digital mechanisms for delivering specifically humanitarian aid? We're not talking G2P or standard, ongoing programs, but the rapid reaction type of hit the ground and let's do a good job with it. What comes to mind with you to you on that?
Of an actual good product or service, or sort of what are
an actual project that delivered humanitarian aid through digital channels in a very effective way that that should be the model kind of thing, like the M-Pesa of the humanitarian assistance.
I don't know one that I would say is the model. The way that I look at it is that a lot of these programs are really good lessons of how things have to be built upon in the future. And oftentimes the real challenge with developing humanitarian programs is that they're being done in a very short time period. There's a ton of pressure to be able to deliver something in the absolute last minute that is able to not only meet the expectations, but to exist for the next, for the future. This is building the foundations for the future. And that's a very difficult scenario to be in. When I was working with the Better Than Cash Alliance, that was during the Ebola crisis. And so there was a ton of pressure to be able to design these systems immediately to work. And those systems essentially came with a ton of challenges, because these are not things that are designed and developed last minute. These are things that take a long time to set up. These are things that require a lot of energy and effort to build the foundations that then, when the crises happen, to take use of. And so there's a lot of good lessons that have come out of Ebola. There's a lot of good lessons that are coming out of COVID-19. There's a lot of good lessons that are coming out of every earthquake, every tsunami, every hurricane that takes place, that we should be building upon. And what I've seen from the organizations that I've worked for is that there's not a lot of lessons learned being brought to the next disaster. The next disaster is just a slightly improved repeat of what happened before. And I think the humanitarian organizations of the world really needed to take a look at that seriously and say, guys, this was a disaster last time. We know all of the fraud and all of the leakages that happened last time. How do we ensure that when we do this next time, that we can minimize that? And some of the things that are coming out, some of the recommendations that I always give is proportionality. And in the sense that the first time you do that first payment, it doesn't have to be perfect. But once that first payment is done, you have another month until that next payment. So you start ratcheting up the requirements. You start saying, okay, for the first payment, we don't care what your name is, we don't care what you are, we're gonna pay you, just give me your phone number, we're gonna pay everyone. And for the next time, we're going to, in that month, text people, identify who they are, identify what their needs are, and begin ratcheting up our requirements for KYC, begin ratcheting up our requirements to fully identify who those people are, and subsequently, over months, build into the program that we want to have it. It's often in humanitarian organizations that they think, we have 3 weeks, we need to have something delivered in 3 weeks, and it has to be perfect in 3 weeks. And the reality is that the scenario on the ground probably doesn't allow that to take place. And so we have to be more flexible about how and when we choose to enforce our own stringent requirements upon the programs we're designing. And so I can't give you a perfect example, but what I can say is that each one of them is slightly getting better, and that instead of slightly getting better, I'd like to see them getting better a lot quicker, a lot faster, learning from the challenges that each of these implementations have faced in the past.
Yeah, and I read into what you say, which that we really should be seeing these digital platforms more of as a readiness to kick in humanitarian situations rather than a rapid response sort of intervention by itself.
And when you look at countries that have really good payment infrastructure, and this is not a humanitarian response, this is more the responsibility of the private sector. When you have countries that have good national ID programs, when you have countries that have limited KYC bank accounts or limited KYC accounts used for certain purposes, when you have interoperable switches for ATMs, for banking networks, when you have the infrastructure, those are the countries that in a crisis like COVID-19 can be utilized and are being utilized. Peru is a good example. Colombia is a good example that I know of. Brazil is doing incredible work right now because they had designed and developed the infrastructure necessary that when a crisis like this happened, they can take advantage of it. A country that doesn't have proper ID programs in place, that has poor national infrastructure and payments, then can't leverage that infrastructure when times are difficult to provide social assistance and to provide digital assistance to the people in need. And so even from a central banker's perspective, being able to build this infrastructure is increasingly being seen as a national requirement. When you look at India, India has done a fantastic job of developing the India stack. It's not without its challenges, don't get me wrong, but when you have Aadhaar, national ID, implemented, when you have the UPI, which is the payment standards, when you have digital signatures, when you have digital information that can be stored online, you now have a platform that should be able to be utilized. You have agents all over the country. These are security-related, national interest-related infrastructures that countries are taking advantage of. And I think that really countries have to begin to see humanitarian assistance as benefiting from the development of this kind of national infrastructure.
Right. Yeah, absolutely. Now, one theme that comes up all the time is, and perhaps the hardest one to answer in any convincing way, has come up in the chat while you were speaking very early on, quite a few times. It comes up in the course all the time as well. Is this matter of financial education or literacy and digital literacy as well for people who, in a particularly humanitarian setting, are being forced to learn new stuff just when their mind space is really somewhere else. They're in very dire circumstances. Probably not the most conducive situation for teaching new stuff. Just give me the cash, right? Is a bit the mindset. Do you have any thoughts on how to deal with this education literacy aspect, or is it just a matter of just? I mean, what I typically say in the course all the time is like, well, all those resources that you in theory save by going digital, you should be putting on the ground. So and don't think that digital is about removing your presence from the ground. It's like, so remove yourself from counting cash business and put yourself in the business of supporting people.
Yeah.
Do you have any thoughts on this?
I think this comes back to the discussion that I had on whose role is it to do financial inclusion in the humanitarian world? And I think that there's a lot of debate, even internally within organizations, to understand, is it the role of the World Food Program or UNHCR or UNICEF to promote financial inclusion? Is it part of humanitarian assistance to perform the role of financial education? And I think increasingly these organizations are beginning to see that, yes, to a degree, they have a responsibility to promote financial inclusion. But I'll tell you, it's not an organizational, there's not a agreement within the organization of that's the direction that they need to go in. There's more an awareness now that what they're doing is part of financial inclusion, but there's no clear vision towards how these organizations have to take a role. And maybe they don't. Maybe the role of the humanitarian organization is to act as the middleman between donors and beneficiaries and deliver that funds, and that for them to partner or work with other organizations. And there's a ton of fintechs that are starting up that are actively involved in financial education programs through text messaging, through behavioral analytics, individualized messaging that goes back and forth. I can talk about a lot of them. I mean, I think Juvo is a great one. They really have done, they've worked with telcos in the past to increase usage of telco financial service products and other programs for the private sector. So maybe the question is maybe they should start seeing humanitarian organizations as clients, and maybe humanitarian organizations, as you rightly mentioned, should understand that in order for their programs to be successful, they may have to either do the work of financial education or pay for organizations that are experts in the work of financial education for the specific kinds of people that they're dealing with to assist them in the program. Because yes, they hypothetically should be saving money. As I mentioned, that only happens in certain cases. But part of it is not just giving someone a card and saying, great, I've done my responsibility, you do you figure out how this works. It's also about being able to train people and train people in a way, as I mentioned at the end of my conversation, train people in a way that not only serves your program, but also serves the value for the individual to move past you and to move into the formal financial services world, which may not be the way that a lot of these organizations pursue at this point. Teaching people how biometrics works is great, except for the fact that none of these markets operate financial service products that use biometrics. And so you're spending time, energy, and effort to teach people how something works for your interests. But if they were to leave your program, that knowledge is not useful for them to become included into the formal financial sector. And so that has to be weighed against what kind of service. It's sexy. It looks really good in photos when you have a poor person scanning their finger on a finger scanner. But when you talk about actually what this means for them and the skills that it's giving for them to leave informality and join the formal financial services world, there's a disconnect that I think is still present. And I think that comes with the kind of financial education that has to take place for beneficiaries. It's not just about for humanitarian assistance, it's about for operating as a respected regular person that has access to financial services tools. And this also goes too with pricing. You know, many humanitarian organizations don't charge beneficiaries for their services. I get that. That makes perfect sense. But in the financial services world, they do charge, and people have to understand the consequences of what it means to operate with those fees. And it may be the responsibility of humanitarian organizations to nominally at least tell people that there would have been a fee, but we're not charging the fee because of this program, to get people mentally aware that using these services implicitly comes with a fee, so that when they join the formal financial services world, this is not a huge shock for them, that they're able to manage that. And so these are some of the elements that fit into the financial education challenge that humanitarian organizations have to focus on.
Yeah, it's a great set of points. We only have a couple more minutes. There's so many questions on the chat. Instead of getting on something which we cannot do justice with, let me pick a question that, let's see, where did it go? It's a bit off. You're probably not expecting this question, but yeah, it's relevant.
I always like difficult questions.
No, it's not difficult. It's just different. But because we're, a training organization, DFI, people worry about their careers and they come to DFI for changes in their careers as well. So the question is, what will be your career guidance for people taking the digital humanitarian course, the desire to have a career switch to digital humanitarian aid payments?
I think it's a really good decision, because it seems like, okay, let's have a conversation. Many of these large humanitarian organizations that, I don't want to talk about any in specific, but have prided themselves on being supply chain organizations. They've built their entire business models around delivering food, or delivering goods, or delivering humanitarian services through supply chains. They buy food, they buy healthcare supplies, they buy tents, they buy all of these elements, and they deliver them to their beneficiaries. And you have these organizations that are built up around the concept of logistics and logistics delivery. That's what humanitarian aid was. But as we're moving away from humanitarian aid into humanitarian assistance is much more driven by giving people the ability to be able to make the decisions and make the purchases that they need for themselves. And so there's a battle even within the humanitarian organizations themselves of whether or not they are a supply chain driven organization, or whether they're moving towards a financial services type of organization. And these struggles are still playing themselves out. Increasingly, the financial services side, the digital financial services side, is winning. And you can see that by the first quote that I said. 10 years ago, WFP gave $10 million in digital financial services. Last year, they gave $2.15 billion, which represents 35% of their portfolio. So in 10 years, they've digitized 35% of their portfolio. Does that mean that 100% of their portfolio is going to go digital? No. For sure, there's going to be a huge, huge area in still being able to manage the logistical chain, throwing things out of the back of the airplane, throwing food out of the back of the airplane. That will still be there. There's still cases that will necessitate it. But increasingly, the opportunities for digital financial assistance is scaling, and is scaling fast, not just within the big organizations, but with all of the other subsidiary organizations that are using it. And it's important to say, big organizations are actively thinking about how they can leverage their platforms for partners. And so these products and services that you've seen the pictures of, all these cards, products and services, increasingly these big organizations are saying, one, how do we work together as one, not as an individual organization, but as a industry, humanitarian industry? And two, can we begin to white label these products so that all humanitarian organizations can make use of them, instead of requiring each organization to go through with the incredible cost of developing their own platforms and products and services. And so this is part of the discussions about the common cash statement that all of these organizations have moved toward. And they're doing it not only in the interests of themselves, but also in the interest of the industry, to really be able to say, this is something that is hugely important for the entire humanitarian industry, and that work is being done to make it even easier for more organizations to make use of this technology at scale. And so for someone learning in this course, you're really at the beginning of the wave of where the humanitarian industry is moving towards. And I really do see that this is the future. So if you're looking for a reassurance that this is the right decision, I can tell you that the majority of these big humanitarian organizations are pushing this wave forward, and that the entire humanitarian industry is going to have access to substantial technology and do so at a really limited cost. That's really what these organizations want, because the more access little organizations have to being able to use this technology, the better. And so these organizations, big and small, will need people who understand how this works, because that's really what will make them excel in the future at delivering their assistance.
Great. Well, thank you very much. It's been very comprehensive. I think very well articulated. Made some really important points. So thank you very much for sharing your thoughts and your experience with us. Sarah, do you want to close?
Can I just say one thing? I think for all of the questions that are in the chat, there's 20 of them that are still open and 5 that are dismissed. I'm happy to answer all of them after and share my answers with each of the individuals, and hopefully share this with everyone. I really appreciate all of the interest that's been on here. If you guys want to follow me, please follow me on LinkedIn. It's LinkedIn, my name, Jeffrey Bauer. The link was on there before. And if you're interested in understanding about some more of the work that I do, please feel free to send me a message. I'm more than happy to answer any questions you have. My email is jeffrey@bowerpartners.com. That's jeffrey@BOWERPARTNERS.com.
Thanks so much, Jeffrey. And what I'll do is we normally share the video recording the next day, so it will be tomorrow. And we also put a post onto the DFI website. So we'll include all of your contact details and your LinkedIns. If people didn't get it round this time, that they can pick it up from that recording. I'll also send you a list of the questions, because I can download that from Zoom, and then you can answer them, and then we can attach that with the email that gets sent around tomorrow as well. Because I think there was 1 or 2 really interesting questions about what the benefit to the financial service providers or an MFI might be in collaborating, and I think there's some mileage there to get some response for you on that in particular.
For sure.
Thank you very much, and I've been super impressed. I always have a passion for the beneficiary. That was one of the reasons why I chose a lot of the courses around humanitarian and digital agriculture, because it's at the end of the day for me, it's about financial inclusion and reaching the beneficiary. So hearing you very clearly tell us that that's what we should be putting at the center of our thoughts when it comes to this is really reassuring and resonates an awful lot with me. And I know as well it would do with Ignacio too. So we're really, really thankful that you've given the time today. And I'm excited because I've got a webinar that I'm working on for sort of July, August on interoperability, which connects nicely. We've got some more coming up on digital identity, because that's a particular focus for DFI this year. And I'm also thinking that we should revisit the topic of financial education, because it comes up so often in many of our questions and issues. So hopefully we'll have some more webinars in the future that will relate back to some of those key core things that you mentioned that were so important in having, the infrastructure and systems in place to enable these digital payments to be made. So thanks, Jeffrey, thanks, Ignacio, and thanks to everyone, attendees that joined us today. It was really fascinating, and I look forward to seeing you all in a webinar again soon.
Okay, thank you very much.
Bye guys, all the best. Thank you.
Bye-bye.
Bye.